This chart shows the seasonal impact of the US Producer Price Index on the Euro-US dollar over the last 275 prints spanning 23 years. Now, US inflation, alongside US labour data, is a major focus of the Federal Reserve right now. So check out to see the seasonal dynamics of the reaction to the print that could play out on Thursday. Do you notice how the Euro-US dollar pair has tended to gain post the CPI print and into the PPI print, which indicates dollar weakness? Now, looking at the actual print that's expected, we can see the headline is expected to fall to 5.4% from 6.2%. The core year on year is expected to fall to 4.9% from 5.5%. But the month on month prints for both the headline and the core are expected to both tick up above the prior readings. So it's a very similar dynamic to what we saw with the CPI on Tuesday, that the year on year is falling, but the month on month is rising. Now, if we just take a look at the seasonal dynamic, dollar weakness is the favoured seasonal pattern over the last 23 years. So if we saw a big miss here, if the headline came in below 5.2, core came in below 4, headline month on month came in below 0.1, we would expect the dollar to weaken on expectations that the Fed can be less aggressive, and that should potentially lift the Euro-US dollar pair in line with its seasonal perspective. Major trade risks. The major trade risk here, of course, is that you don't get those prints, and the Fed speaker Mester later in the session changes the sentiment around the dollar. Remember, HYCM clients can access the Seasonax product in order to analyse over 25,000 different currency pairs, indices, commodities, as well as individual stocks. Please do contact your account manager for a free trial and get started right away. Certain products and services mentioned herein may or may not be available to all clients, depending on which HYCM Capital Markets Group entity their trading account adheres to.